Hey, what's going on, guys? Dan from Pekoe Mortgages. Today I want to talk a little bit about interest rates. We've got a whole bunch of things going on. So on Tuesday, Stats Canada is going to announce where our inflation is at. Are we up? Are we down? Month over month. Now, last week, we had announcement from the feds in the U.S. that inflation actually dropped. So it went from 9.1% down to 8.5%. Is this going to stay, or was it a momentary drop? We're not sure. We're going to see what happens next month. But what this means here in Canada is typically things follow what happens in the US. So there's a prediction here that from Financial Post that the odds of the Bank of Canada hiking 75 basis points in September just went down. So it went from 60% down to 45%. And this is based on the data from the inflationary numbers in the US. Doesn't mean we're not going to see an increase, but the increase might not be as bad as we were originally predicting. That being said, if we jump over to some of the news in the US, CNBC is saying that the rate increase needs to continue until inflation's around 2%. So that's their target for inflation. They're going to likely see things creep up. So keep in mind that rates likely will creep up in September. But it's interesting. I'm curious to see where our inflationary numbers come in on next Tuesday. So the other thing here, CBC came out with an article that said lumber, wheat, and oil tumbling prices could mean the worst of inflation is over. So we've seen that lumber, there was a spike, 300% increase on lumber, and lumber directly affects, it accounts for about 10 to 15% of the raw cost for new construction. So you may have noticed that if you're looking at pre-construction, those prices are a little bit higher. They've tried to anticipate the costs of lumber and other materials going into those builds going up. But now we're starting to see lumber drop, oil's dropping, wheat's dropping a little bit. Is this going to affect inflation? That announcement on Tuesday will clarify things for us. Fixed rate mortgages, that's tied to the bond market. What's going on with the bond market? Well, it was dropping for a little bit, and then we started to see this week it flattened out, and looks like we're going to close a little bit higher today than we were on Monday. That bond market dictates the fixed rate mortgages. I don't think they're going to be dropping anytime soon. Also, if you've got a renewal coming up in the next 3 or 4 months, I'd suggest, in order to leverage the rates today to hedge against any rising interest rates, try to lock something in a little bit early, because what happens is if you can get an approval 3 or 4 months out and rates are going up and you get that renewal notice in the mail, at least you've got something else to fall back on. Got any questions? Hit me up. Thanks, guys.